welcome back to another YouTube channel of FlairFX, where we make trading simple. If you're new here, please make sure to hit that subscribe button, hit the notification, and if you're back here, welcome Black Fair family, we've missed you. So in today's video, I'll be breaking down how to trade SMC, right, and retail concepts together. And I'll also include a trade breakdown at the end of the video, so stay tuned. Right, so now before I start anything in terms of the chart analysis, right, I just wanted to break down what the two strategies, pros and cons are. What is SMC good in? What are retail concepts good in, right? Because I've traded both of them, right? And I think each of its own are very good in different places and in different market setups, in different currencies, in different instruments, right? But with SMC, the nice thing about it, you can most definitely intraday trade it. With retail concepts, it's a bit tricky because you need to be a little bit more patient. I would consider this a swing strategy, right? But now, with the basis of SMC, right, we basically trade market structure, right? The breaks of structure and the changes of character. Breaks of structure indicate trend continuation, change of character indicate what do we call this, trend reversals, right? Now with retail concepts, flag patterns, support and resistance kind of determine where we're going to go with different types of things. But now here's the pro with retail concepts, right? You can spot a reversal before it happens. And then the difference with retail concepts is that you have to wait for the reversal to happen to actually trade it, right? What do I mean by this, right? With retail concepts, we can have a pattern like a rising wedge, right? A rising wedge is a reversal pattern. We have reversal patterns and we have continuation patterns in retail concepts, right? So now let's start off with reversal patterns. Reversal patterns, we kind of have things like the rising wedge, double tops, double bottom. Those are the things that kind of indicate that, hey man, like the market is going to reverse, right? Because it's a psychological price action. A lot of people trade these types of patterns, right? So we have 3-touch confirmation. On the third touch on a resistance level, that's where you're willing to sell the pair, right? So you'd probably sell it on the third touch. Imagine now, you'd probably sell it over here if you were trading retail concepts. You would manage to get the sell over here. But if you were trading like if you were trading SMC, you could only get the sell over here. If you're trading retail concepts, you could definitely catch a sell right over at this point, right? But now, like I said, there's different for breaks of structure or trend continuation. We have what we call continuation patterns, right? So something like this are called flag patterns, like this, and then usually we put the trend lines like this, right? And then we put another trend line like this, and then we sell off relatively right over here. Most people could sell on the third touch over here, right? Target the lows, or you could sell out as an impulse, obviously right below the entry, the stop loss just above that point, right? There are different ways to execute, right? But now here's what gets really interesting, especially once you start using both of these things together, right? So now I just wanted to demonstrate how both strategies execute based on like the entry criteria and how you can combine both SMC and the retail concepts. So this side is SMC and then this side is retail concepts, right? So as you can clearly see, like I said before, with our strategy, it's clearly based on breaks of structure, changes of character, right? And then obviously we use order blocks in terms of execution, right? So check this out, right? So clean, we can see that there's a high that's being formed, and then there's some internal structure being formed, right? Here's a low, the low has been broken, and then a change of character happened initially over here, right? As you can clearly see. Then obviously what do we use? We use the order block that has been printed. We would execute based on the order block. Price taps us in. We aim for probably the high, or using the Fibonacci can help us figure out how we're going to get there, right? Even in reversals, I'll just break down reversals. Here it's the same entry criteria. In reversals, the same situation. A change of character happens. We know that we're in a downtrend. We're looking for sales. We look for the same entry criteria: break of the top, break of structure, internal change of character, and then we execute based off of this position over here, like this. So that's how you execute for a reversal in SMC, right? And obviously targeting the lows using the Fibonacci. That's clean cut simple, right? Now with retail traders, right, they use a lot of support and resistance. They use a lot of flag patterns, right? So now obviously up goes up. This is an up. We know that breaks of structures are trend continuation, and the way they see trend continuations are based on these flag patterns, right? So you as a what is this as an SMC trader, if you don't see like any breaks of structure, you just see these types of stuff. If you could draw this pattern out, you understand that hey, the price is planning on continuing or reversing into for a continuation. Get what I mean? So the way they would execute, they would literally put their entry limit over here. Their stop loss would be way bigger than ours on the thing, and then they would probably target the high or using the Fibonacci as well, right? And with them, it's also categorized with a lot of support and resistance as well. They use things like this just for point of reference, right? Like they also immediately when price does break out and comes back, they get in for re-entry. They do break and retest as well. We have break and retest traders, right? Same entry over here is the same entry over here, right? Same situation over here. Now the way they trade reversals, now this is where it gets interesting. That's so different than SMC, right? SMC, you can only tell that there's going to be a change of character initially as it happens, right? With this strategy, you can already know with the 3-touch confirmation, as you see 1, 2, 3, that's 3-touch confirmation, right? 3-touch confirmation in the retail concepts indicates a sense of like power, especially if it respects the trend line, right? That's how we were able to swing NASDAQ as much as it is, right? Then what they would usually do is sell from the top over here, right? With their stop loss a little bit bigger, maybe 15, 20 pips, and then they would be targeting the 90% rule, literally this low over here, right? So they would be planning it on selling it literally to the low over here. But it doesn't mean that they sell over here, then it's done, right? Immediately once price breaks out, they wait for a flag pattern to form, right? Initially, through the flag pattern, there's entries as well, but in most cases, the way they also execute is like this. They come over here, and then afterwards the entry would literally be just below here above this high, and they'll target this, right? Obviously understanding both of the entry criteria and how they look for stuff is the best way to go about it, right? So now how do we both incorporate the way the strategy works, and what can we take away from the retail trader way of executing and the way of strategy like of SMC, right? So the best way I can possibly say is that seeing these types of patterns and drawing them out in your head so you can understand that, hey, the trend is going to change and the trend is going to continue before the break of structure happens, right? Initially, when you can see this happening, then it becomes easier for you to trade the lower time frames because you understand the higher time frame bias, right? And then also with the reversals, right? It's so easy to catch these types of reversals, especially with the entry criteria of SMC, right? Initially, once price approaches the resistance level or the 3rd touch confirmation, right? Literally over here, let's use this thing. Literally over to this point, this is where you understand that, okay, cool, I should just wait for some sort of entry that can happen like this, or some entry model, right? Especially when it approaches these tops in these trend lines, right? Or in these flag patterns, rising wedge, double tops, double bottom, triple bottoms. Those are all liquidity places. So those are just gearing up to be like buy side liquidity, sell side liquidity. As soon as price purchases, then you know, okay, cool, I'm looking for my entry model, right? But I just wanted to show you both of them and then show you a trade breakdown of Euro GBP, of how I've executed based on this strategy, and how you can also clean the execution as much as I did, right? Right, so this is Euro GBP on the daily time frame, right? I wanted to start on the higher time frame mainly because it's a swing strategy also implemented at SMC, so you can get the best value and understand what I mean, right? So before we go anywhere else, this is a strong resistance zone. Retail traders trade resistance zone. You can implement this in your strategy as well. We understand that there's a change of character, and then there's some sort of movement, right? So now, since we know we're on a daily resistance and this is a sensitive spot, right? I want you to, before I even draw out my market structure based on SMC, right? Look at the flag pattern that I was already mentioning before, right? Beautiful stuff. Can you see? Clean cut finish. Let's go to the 1 hour time frame. Maybe we can even get an entry criteria. Look at this, right? Clean cut finish. Price came to this point, broke the low, continued to go up, respected an order block, and flew up, right? So already, as you can clearly see, like with the strategy, you understand immediately once price is approaching these spots over here, this is where you're supposed to be taking like your buys, because you understand it's going to reverse, right? But okay, cool, this market, the highs and the lows like we usually do, we'll just do current market price because that's where we are right now. We'll use these ones as well because they will look way more clean on the 1 hour time frame. Clean cut finish. Let's go to the 1 hour time frame to mark out everything cleanly. There you go. We'll focus on this part here, right? So look at this, right? Before I even do anything, look at the beautiful approach to the trend line, right? Already you can anticipate that the reversal's already coming based on the strategy of in its own. That's 1, 2, 3, third touch confirmation, right? After the third touch confirmation, what did we have? We had a change of character over here, right? Clean cut finish, a change of character on the daily zone. This is from the daily zone, right? All of this is from the daily zone. Now, what is price doing, right? Price has and moved up to this point correctively after the breaks of structure. I'll just label them out just for cleanliness and everybody to understand what's the situation. Another break of structure happened over here. Beautiful stuff. Break of structure over here, break of structure 2, right? Then we have an internal change of character over here. Oh, we could classify it as a change of character, right? And then what do we look for when a change of character happens? We come over here. Let's go to the 15-minute time frame because I feel like it's way more cleaner. The initial change of character happened on the lower time frames like this, right? Look at this. Look at the beauty of this as well. Look at the pattern, as you can already see. This is a reversal one. You see? Reversal pattern like this. This is a clean cut one. This 1, 2, 3 touch. And then look at the touch as well. There was a purge of liquidity that happened over here. So we can expect price to pop in just to pop up back up, right? But for now, where I'm mainly so interested in is the change of character that happened over here, right? Let's go to the 30 minutes. Yeah, I'm literally breaking down the pair with you guys, right? I'm going to take this trade from this point over here, this order block, because it's the one responsible for the change of character, and it's a change of character and we're planning on reversing anyways, right? So now we're gonna come in over here, put the star limit over here, and then our target, right? A lot of people get confused, especially with things when they don't know where they could take their targets, right? For us, understanding that this pair is very, very, very sensitive and it's at a sensitive zone, I wouldn't mind swinging it, because already we have what? Look at this on the daily time frame. On the daily time frame, we're already on a support level, and also I understand we've moved up correctively. Like, obviously the daily candles are pushing up is this, but when we check the 4-hour, look at how the market price action is. It's very like corrective. This is a reversal pattern. So my anticipation is that we're gonna come into that order block, respect it, right? If not, we'll wait for an entry confirmation again, because like as much as it is, the market sometimes isn't your friend. You get what I mean? Or most of the time. So understanding, waiting for the entry, you could probably take a bigger order block like this, but even if you highlight this, it's gonna probably show 50% of that order block that I'm already highlighting. Can you see? So you could take that amount, or you could just use the order block that's already highlighted on the lower time frame, because automatically this full order block highlights the 50% zone, right? So clean cut finish. Let's go to the 1 hour time frame. Let's go to the 15, because that's where it was more clean, right? So already automatically, I love the fact that there's some sort of reaction over here. Here's a pattern. A lot of us can categorize this as liquidity. A lot of us can categorize this as a lot of things. But at the end of the day, different people executing. If I was still trading the Falcon, which I do here and there, this would have been my setup right now. I would currently be in a trade for 1:2. I wouldn't mind that, and then just letting it ride out. I'll probably have even put my stop loss a little bit more tighter based on the fact that this order block has been mitigated and price already keeps on moving higher and higher, and understanding that we're coming to this zone, so we're buying into that zone, right? So implementing both of the strategies and understanding them individually. Like for now, I don't expect you to go to your charts and just start marking out like all the patterns and trade them successfully, right? Take your time to backtest the pairs, take the time to understand the strategy in isolation, understand the flag pattern in isolation, understand SMC in isolation, and then once you can master both of them and you can trade them consistently, then that's where you can reap the benefits of trading them both, because you are master of both of them. You get what I mean? But let's just go back 30 minutes just one more time just to see the entry, the beautiful entry. There it is. Hopefully it does respect it by the time I post this video, and if it does, you guys are going to be very, very happy. But yeah, for now, this is an entry that I'll be willing to take. I'll be willing to swing this pair until the bottom. But other than that, thank you for watching till the end. Mr. Flair signing out.